Hello and welcome to this Forex Preview at xm.com. We'll be discussing upcoming U.S. data and the outlook for the dollar. I'm Maria Pachordes, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, leading indicators seem to suggest that the U.S. economy is losing steam. Now on Thursday, personal income and consumption numbers are due out, along with the core PCE price index and the latest ISM manufacturing index. And on Friday, we'll get the jobs report for November. What are we expecting from all this data? Do you think we'll see the impact of higher rates reflected in the numbers at this point?
Hello, Maria. I think it's a little bit too early. I think that the labor market needs a few more months to really, for the impact of higher interest rates to really show up. And allow me to unpack that. So you are absolutely right. Almost every leading indicator is saying that the economy is losing steam. So from business surveys to inventory levels, the housing market, consumer sentiment surveys, and of course the deeply inverted yield curve, all those are classic signs of a recession, really. Now, the problem with that is the timing. So even though all of these leading indicators are saying the economy is slowing, it's really uncertain when the downturn might hit. So, and of course, all of this weakness, it hasn't been reflected in the official data yet. Consumption remains solid. The Atlanta Fed GDP Now model points to growth, GDP growth of 4% this quarter in annualized terms. And of course, the labor market is still near full employment. So yes, the economy seems to be slowing down, but the real weakness hasn't shown up yet, at least not in the official data. Now, this week, as you pointed out, we're going to get a ton of data on Thursday, including the core PCE price index. That's likely to show a slight slowdown in inflationary pressures, at least in October, seem to have abated a little bit. Now, of course, the main event is going to be the employment report on Friday, and that is also expected to be on the solid side. So the markets are expecting non-farm payrolls at around 200,000, the unemployment rate to stay unchanged at around 3.7%. That's very close to cycle lows, and wage growth is expected to have cooled, but just a little bit. So it looks like the impact of all of these rate increases still hasn't shown up. And of course, the labor market is a notoriously lagging indicator. It just takes some time before higher interest rates really show up in jobs data. And it might be a story for next year.
So how might all this affect the dollar? Is a trend reversal around the corner?
The outlook for the dollar is a little bit complicated here. So I think that the dollar is at a crossroads. And by that I mean, we've seen several signs, many of the elements that fueled this spectacular rally over the last couple of years, they seem to be fading. So inflation in the US seems to be moving lower. The Fed seems ready to slow the pace of its rate increases. And normally that's negative for the dollar, of course, but I also don't think a trend reversal is imminent. And the argument is really simple. Other major economies, like the Eurozone and the United Kingdom, will probably fall into recession long before America does. If you look at business surveys, they suggest that the Eurozone and the UK might already be in a recession, whereas the United States probably needs a few more quarters to get there. And the difference, of course, between these economies was the energy shock. Because the US produces its own energy and it's a net exporter of energy, the US economy was much more resilient to the energy shock. So blending everything together, I think that the dollar rally is in its final chapters, but a proper trend reversal remains premature for now. Huge dollar rallies usually don't end while the outlook for global growth is deteriorating, because safe haven flows, if the rest of the world is doing even worse than America, safe haven flows usually keep the dollar supported. So I'm getting a sense that we are close to the end of this rally, but the reversal might be a story for next year.
Marios, thanks so much. And thanks for joining us at xm.com.